Hello everybody, my name is Craig Bennett, and today I'm starting a brand new course on how to become a self-broker in the stock market. And by the end of this course, you will have the same knowledge as many professional day traders, and you will have the understanding of the tips and tricks and the tools that's used. But before we get any deeper, I want to mention any companies or tools I show, I'm not promoting them. It's up to you to research the companies, even if it's someone that you trusted told you to long or short a given company. It's up to you to research on the actual company itself. And keep in mind that is your money on the line after all. Also, my overall goal for this course is to have you be able to test your skills before you jump in and for you to know the tricks of the trade, and that way you actually will be successful in this. Now, the neat thing with this is the tips I'm going to give, it will allow you to spend time with family or work in some other job while you're doing it. In fact, a lot of self brokers do that. It's where they make the bulk of their money in dealing with the stock market, but they tend to work somewhere else for the insurance. That way, self-employed insurance costs a lot more money, so getting with a company for the insurance there, and that way you can provide it for your kids if you have kids, and that way things will be a lot cheaper, and you tend to get better insurance through a company in the first place. Notes that trading on the stock market is not what it's like in TV shows or movies. In the modern world, most everything is online, and there's many self-brokers that either travel the world, live a retired lifestyle of not having to worry about anything, or work for a company, as I mentioned before, just for maybe the extra pay and keep their skills up and for the insurance then to sell. And they spend very little time actually doing the trading and stuff like this if they know what they're doing and if they are playing it smart. It only takes a few hours. Of course, you can do it full time if you want, but even people who does it full time to take a vacation for, and it's very common here, of someone taking vacation for 2-3 months at a period of time. Sometimes they're used to trading given things that have more of influence certain times of year in, like for example, oranges. So orange juice companies and stuff like that, they might trade more in the summer and spring time frame, whereas the winter, you can still get some use as far as the stock goes, but people tend to lay off a little bit on that time and visit family or whatever it may be. So with that one in mind, that it is not like the movies and to that, and it's not a second by second thing. And what you're going to appear more than not is most people who's self brokers work at a side company again for the insurance and to keep their skills up, because if the market becomes unpredictable, then you need to basically be working for a company anyways. But it's important to note that you don't have to dress in a given type of outfit. You don't have to live in something like New York City. You don't have to deal with a second by second type of job. This stuff, I'll say, the charts do update second by second, obviously, but for the most part, you don't see like $100 gap going up or down for the most part to most companies. The stuff that you see in the movies where it has to be going like that, so as far as you say buy or sell, that's not the case in the real world. The fact of the matter is during the off hours, what you'll do is you do your research and stuff like that, and I'll teach you how to do this, how to set up triggers. So let's say, for example, if you work for a manufacturing job, and then you just want to do this maybe for extra income or your main source of income, but still keep the manufacturing job for some reason. Well, the thing is you obviously won't be able to trade while you're at work. So what you do is you do your research and stuff like that, and set up triggers. the fact of the matter is even the people on the floor in Wall Street, they don't do the second by second type of deal. There's a lot of variance into that. So with that in mind, most people can actually trade, and it's not as difficult as many people make it out to be. You just got to play it smart, understand the charts and stuff like that, which I'm going to cover thoroughly in these videos. As far as the equipment, and this is something that a lot of people are unsure of when they're getting into this, and if you're watching this video, congratulations, you can pretty much trade stocks. Obviously, you have to meet the age requirements and stuff like that. But, and I'll get into the next video on that, but any normal computer should work, but it does help having multiple monitors. And what I found is most self-brokers actually have about 2 to 3 monitors. And believe it or not, a lot of the third monitor is just playing some online game while they're waiting for something to happen, either for the price to go up, price to go down, or something like that, and just playing some game on the side. But yeah, it's very common to see where you end up having multiple monitors. I've seen in some cases 6 monitors, but personally I just use 2. Sometimes I have a third or fourth, but for the most part 2 is just fine. It helps out. But using, like, say if you're on a laptop, it's good there too. I've even traded on my phone. So if you got a phone, you're good to go. One thing to keep in mind is the normal trading hours for the stock market. And here in the United States, Eastern Standard Time, it's 9:30 a.m. to 4 p.m. Monday through Friday. And the thing to keep in mind with that is each area has its own little things, so check on that. But for here in the United States, you can trade Monday through Friday, but the holidays, bank holidays, you can't trade. The market's closed during those days. Now, the thing to note is it is possible to trade after hours and pre-hours, but it's not advisable. Most of what I'm going to show you is for normal trading periods. And what I will show you does apply for after hours or before hours, but there's so little trading happening on after and before hours. And some firms, they have more restrictions, fees, and stuff of this nature. And we'll get into that in a later video. And basically, it's just not as common, so I don't advise people to trade after or before hours unless if they know about something that is going to happen. Now, as far as that goes, the triggers is something that you will end up using quite a bit, at least what I hope that you will use quite a bit. When I was in school going through my aerospace degree, I got into the stock market back then. And many of the times I was in school, I wasn't physically in class, or I was at NASA and I couldn't really do anything on my phone with trading, or obviously I couldn't be in the computer trading. I had to be in class or at NASA at the time. So what ended up happening is I am just researching the market, setting up what's called triggers. When a condition is met, it will buy. When a condition is met, it sells. And that way, some days I'll literally walk out of class, and by the time that I got in class and I got out of class, I was $300 richer. And it had nothing to do with class. It's just knowing how to play the game smart. And that's just something that you got to keep in mind. Obviously, the more money you throw in, the more money you can get out. And keep in mind, we're talking about college students. Not a lot of money there. So with that in mind, that's something that you got to keep in mind, where a lot of people who you might work with do trade on stock market. I'm not talking about 401ks. I don't consider as actual trading. I'm talking about actual trading, self-brokerages. So with that in mind, what is the return on investments that you should be expecting? What I found in my personal case is about 10 to 12%, sometimes a little bit more, sometimes a little bit less. But basically, let's say that you throw in $100. Well, expect that you're going to get back, say, $112. And this is before taxes, before fees, and before anything like that. So keep that one in mind. into itself. But as far as things that you will be learning in the future classes is what is a brokerage account, the different types of brokerage accounts, and what research to gain you the best knowledge as far as how do you go about researching stocks in the first place. That's a lot of people run into that particular problem. Then there's other things like terminology, which is what we're going to cover in the next class. I'm also going to show you in the next class a simulator. And basically, if you can't make it in the simulator, I would not advise it to make it into the actual thing, actually try in the real world. So keep that one in mind. Also, we're going to get into other things is we're going to actually make a brokerage account. I'm thinking about using Fidelity for this particular example. I have brokerage accounts with TD Ameritrade, Scottrade, and it's pretty much the same type of format with going on either one of them. I even had one with a few banks before. And we're going to get into the actual tools that you could use. Obviously, keep in mind that it's up to you to figure out what tools you should use. We're going to get into how to set up your account for if you die or something happens to you, so it doesn't go to the government if you're in the United States, that is. That way it goes to the next of kin or whomever you want it to go to. And we're going to get into how to transfer assets from one account to another. So if you're maybe with one firm and you want to transfer your stock from that to another, how easy it is, what's the process, questions you should ask, and we'll go with that. We will also get into the different types of stocks, and at some point we're going to get into restrictions that you might face when trading, so it's fairly important with that. We're also going to get into the difference in the bear versus bull markets. What is bear versus bull? Things you should know when you're hearing people on TV about bear versus bull. And within this, I will get into why it's not always a smart thing to listen to news stations or the experts on TV. That's actually fairly important. A lot of these people on TV, they're there for the hype and glory and whatever. They're not really there for the knowledge base. That some of them are worthwhile, but keep in mind that it's not always smart to listen to them. We'll get into the difference between longing and shorting stocks, and there's a lot of money to be made in both. We'll get into how to read the charts, which is the most important thing that you can probably get out of this class, especially if you have a little bit of background into this. And some tools you can use to test your skills without using your money. Note, I'm setting up this course so you can actually follow along in the real world and set up your actual accounts, practice, and test your knowledge. But any companies, again, I show, or any tools I show someone, it's up to you to do the actual research on it. So right now it's 2017. In case you're watching this in a deep distant future, United Airlines has done some shady stuff on their airplanes, and what ended up happening is their stock tanked. Well, someone could say, yeah, buy United, buy United, buy United. I'm just using that as an example, by the way. But they can say that, and then within an hour of word getting out of what they did, well, you could be losing a lot of your money. While that might have been right in the past, you need to be able to do research real time and figure out, okay, are they BSing you or not, or is something about to happen? That's the biggest thing. Whether they're right or not doesn't matter. Is something about to happen, because all this is you're predicting that the stock will go up or down depending on the scenario, and how are you going to be able to make money on it? Keep in mind, even if a company loses value, you can make money on that. And that's shorting, and I'm going to teach you how to do that. It's very easy. So if I knew about, say, United, where they busted up that doctor, and I say, oh, well, that's going to hurt their stock, I was short their stock because I knew it's going to go down. Now, I might have guessed, well, go down this far or this far. And that's a totally different thing. That goes with the charts and a few other things on the consumer confidence level and being able to read people on a global scale. Whereas just knowing it's going to go down or going to go up, that's going to help you in the long run. That's something that is very useful into itself. So with that being said, it's very important to be comfortable with researching, because just doing an educated guess, I would think about 90% of any stockbroker's time is purely research. Just like lawyers, most of the job is just simply research. Anyways, we will also get into higher tier subjects later on in class beyond what I just mentioned. But again, it's important to note that no matter what resources that you use to learn the market or how you prepare to start trading, there's always a risk in the market, but you can tame the risk by simply understand the tools of the trade. Also, again, the notes that for day trading, it's normal about 12% range of getting back whatever you put in. But keep in mind that you could easily lose. There's no guarantee in this, and it's just like pretty much anything else. There's no guarantee in life, and you might be working somewhere now, and there's no guarantee in a couple months you're going to have the same job. Ask people back in 2007 when mass layoffs happened and a lot of jobs went away. There's no guarantee in things. It's just something that you got to note, especially with this, where you're dealing with raw money all the time. But keep in mind with this that for taxes, I'm going to mention this before we head off. Taxes and stuff like that, I'm not going to cover that, and it's up to you to do research on that, because I have no idea where you as a person might be. So if you're in the United States, there's going to be one tax law versus somewhere like maybe the UK or somewhere else, there's a different tax law. But with that in mind, overall, this will help you at least get started, and also to actually have the knowledge on how to read the chart and to be successful to some point. But with that in mind, I'll see you in the next video, and hope you have a great day.